very rarely do they ring a bell for you at a major bottom. Sometimes they do, and you're too scared to listen to it. Oil here was a perfect example. Actually, oil went negative about $35 to $50, I believe, if I remember correctly, here in March of 2020. That was the bell ringing that the bear market in commodities was over. But I've already talked about oil before. I want to talk about metals here. So let me switch over to the metals chart. So it might be that we are ringing a bell right now. So we've been, in some of my previous videos, I've explained that we're in the declining phase of this 8-year cycle. This is obviously the time to be accumulating ahead of the advancing phase of the next 8-year cycle. So let me point out a couple things here. This was the 8-year cycle low in the end of 2008, and then we got another 8-year cycle low right at the end of 2015. And if you'll notice, this cycle ran a little bit short at about 7 years. And now we are about 7 years into this 8-year cycle. So I see a lot of people very frustrated. They don't want to, they don't want to ever see gold and silver again. I'm doing my best to try and get people to use this period to accumulate. I understand that once this is over, there's going to be an advancing phase, and I can look at this long-term chart and understand that gold is in a bull market. A lot of emotional, instant gratification type retail traders have been frustrated by this relentless move down since March of last year, and actually the actual top came way back in 2020. So gold has been in decline basically since the about July or August of 2020. And it's building out the handle of this huge cup and handle basing pattern. So I'm going to make a case that maybe this cycle ran 7 years. We're at 7 years right now. We may very well be putting in the 8-year cycle low right now. Now, almost no one is anticipating something like that. I think everyone is anticipating at the most we'll get a bounce and then another leg down in March, and that's kind of that is a possibility. It was my first and most likely scenario, except there's something going on in the dollar that makes me think that may not work out, and that we may put in this bottom earlier than a lot of people are expecting, and then they're going to get kind of left at the station. Not really, because I mean, realistically, the rally out of the 8-year cycle low is going to last at least 2 years, probably 4 or 5 years. So you're not really going to get left behind. But of course, what happens is when the market starts to rally and you're anticipating it's going to go down, it takes you a while to finally accept that you've gotten yourself on the wrong side of the boat, and to switch gears, go to the other side of the boat. And then very often what happens is that might be a short-term top, and you get in, and then you have to suffer a drawdown. And of course, the drawdown makes you think that you were right all along, and that the bottom is going to occur later, next year or whatever. And so you panic and you sell, often for a loss, and then the dominant trend recovers before price does move down and make a lower low, and then then we're in the bull market is in rally mode again, and then you repeat that whole scenario over again. You've kind of gotten scared out of your position. You're a little bit gun shy to get back in, and about the time your emotions say give you the all clear, then that's when we have another short-term pullback. So I'm going to make the case that we may be putting in that 8-year cycle low right here on year 7. We've come down and we've tested and actually broken marginally below the 200-week, this is weekly, moving average. We've worked off all of this huge stretch here in March of 2020. Price was stretched way too far above the long-term moving average, and I've talked about these regression events before. They, one of two things happens. Either you get a big nasty pullback that will take price back down to that to the mean, to the average, or you'll get a choppy market that goes sideways for a long period of time and allows that moving average to catch up. And we've kind of got a combination of both here in gold. And it looks to me like this. I think we should keep an open mind. Let me put it that way. And I'm not going to guarantee that this is the 8-year cycle low. We very well could bounce and then roll over and drop down and come down to this 50% retracement. That is definitely a possibility, but I think you should keep an open mind here that this might be, we might be putting in the 8-year cycle low right here and now. And again, I'm going to base this off what I see happening in the dollar. So like it was almost impossible for people to accept that this was the final 8-year cycle low right here. And every one of these bounces that doesn't end up being the final bottom, comes down, makes a lower low. It just makes traders more and more gun shy, harder and harder to pull the trigger. But the reality is, as you get later and later in this multi-year cycle, the odds increase with every one of these that one of them is going to be the bottom. So while and I watched as we went through this bottom, and I actually got this bottom, and right about in here, the COTs got really bearish. Everybody, they were all selling their positions if they were able to buy anywhere around here, expecting that the market was going to roll over and go back down again. And very few people really got on board this rally out of this 8-year cycle low until it was close to this top here, where we then had to churn and go sideways and just chew people up. And then, about the time everybody really got frustrated with the market, then we get another push into this top, and then that evolves into this just horrible sideways mess for 2.5 years here before the same thing happens. Again, this long slog down. Everybody gets frustrated and gives up, and that's the fuel for the move into the 8-year cycle top, and that culminated with the beginning of the war in Ukraine. So, like I said, I'm going to make a case that we may actually have this 8-year cycle low forming right here, maybe a little earlier than most people are expecting. I know I was expecting it in March. I know a lot of people are expecting it in March, and it may just be that it's going to sneak up on us, and it's forming earlier than everyone expected. And if that's the case, it's going to leave people behind because they're expecting price to roll over, or if they do get on board, they're going to be very quick to pull the trigger and lose their position. And it may be that you are getting in, buying at one of the great all-time buying opportunities. Maybe one or two or maybe three of these come around in a lifetime. This may be one of them. One of them was way back in 2002 when the bull market started. But this may be another one here. We've got a base forming here in gold that's over 11 years long, And when this does finally break out of this handle, this is going to go a long way. I'm on record, and I continue to say it. Silver is going to be a piece of cake to $100 during this next 8-year cycle, and gold, I think 7,000 is a piece of cake, maybe even 10,000 at the next 8-year cycle top. So I think we should keep an open mind here and not get locked in on one particular scenario, that this has to be a failed bounce and it has to come down and make a lower low in March. That this may be a sneaky 7-year cycle low, or 8-year cycle low forming right now, and it's possible that it's going to catch a lot of people on the sidelines, and they're going to miss this. So again, if you want to see the analysis on the dollar that makes me think this is a possibility, you can sign up for the monthly newsletter, and I've gone in depth into that analysis in the weekend report that I published just a couple hours ago.